Good morning, everyone. This morning we're releasing the March quarter ACCI-Westpac survey of industrial trends. I'm very pleased to be joined this morning by Sian Fenner, who's recently come to Westpac as a key member of their economics team. To set the scene, I think the March quarter survey shows that economic conditions in the manufacturing sector are in line with what we saw in the December quarter, so I think quite benign, reasonably neutral. It shows that some of the green shoots that we saw in the December quarter have been maintained in the March quarter. These results, I think, in part reflect the fact that we saw that first interest rate reduction in February. Obviously, there are significant questions emerging now about what the likely impact will be of a changing, disrupted global economic environment. It's too early to say what that will be, but certainly I think the early signs, or from the signs from the early part of the March quarter, a reasonably benign outlook in terms of what this survey is showing. Obviously some question marks about business investment, when we'll see some renewed signs of strength with that. But certainly the deep pessimism that was there 12 or 18 months ago seems to have passed. And obviously the impact of changing global economic circumstances yet to be factored in. So maybe, Sian, over to you, some quick comments, and then we'll take some questions.
So absolutely. So the composite index did show some improvement on production and particularly on new orders, but it very much is, as mentioned, sort of a benign environment. The manufacturing sector is still facing some challenges. That's including labour skill shortages. And also actually we did see a number of firms report that a net increase in their average input prices. So there are still some factors there about, which sort of brings the question about the sustainability of the manufacturing sector in their recovery, given still elevated cost pressures and the skill shortages that they're still facing.
Okay, questions?
The latest OECD report is out today, and it paints a pretty grim picture for the world. For Australia particularly, tariffs will take about $500 million out of our GDP. What sort of impact is this going to have on business, and is the unpredictability of Donald Trump changing his mind on an almost daily basis making it harder as well? And for you, Shana, how is this going to impact consumer confidence and potentially an interest rate decision as well?
Do you want to start on that?
Yep.
Just come in front of the microphone. Would be good. Yeah.
Okay.
Right.
Okay. So the OECD report did show some downgrades to their views for world economic growth and therefore for Australia. Actually, at Westpac, we're keeping our forecast at 2.2%. The reason being is that we actually see some more domestic factors. Now, it's without a doubt that there's a lot of global uncertainty out there. Part of this uncertainty is very much that Trump is, there's been some change, flip-flopping between which countries, the extent of tariffs that have been put in place, also the dodge as well. But we would need to remember that there is, for every action, there is some reaction. And for Australia in particular, what's going to be important is actually the indirect effects. So particularly, we're going to be watching how China responds. We've already seen that they've been announcing some domestic support, and that's going to be important. Firms can also redirect away from the US. So it's very much sort of a pull of these different forces, and one does not need to be quite nimble and reactive.
So just to add to that, I mean, I think, look, at this stage, very early to say what that full impact will be. I think business is watching some of the developments with concern. But really at this stage, we want to see more evidence about how that plays out at a global level. For a medium-sized trading nation like Australia, any impact on the global trading environment is something that can have very significant consequences for our economy. Obviously, we're seeing strong representations, strong action by the government to work with the US administration to clarify what those next moves are likely to be. The OECD report released today, I think, provides an initial snapshot, but I don't think they've been able to fully factor in at this stage what those potential impacts are going to be down, 6 or 12 months down the track. It's really too early to say.
The Treasurer is also today pointing to some Treasury data which says that the indirect impact of the global trade war would be 4 times worse than tariffs themselves. Does that sound about right to you?
It will very much depend on what their assumptions are. So, I mean, that indirect effect is actually how much they expect global growth to slow, and in particular China, and also how much they actually think that we can redirect. So, that would be one side of the estimate, but then there's others which actually are a little bit smaller. So, I mean, we have seen in previous times that Australia has been able to redirect their exports. It's very much going to matter about what our trading partners and how much of a slowdown in global growth that we do experience.
Budget is a week away. The government is considering encourage Australia to buy Australia. What does that want to see?
Well, I think it's a timely reminder, of course, buying Australian-made products are good quality products, and I think, we endorse that sentiment. More importantly, I think there's an agenda that has to be there for the next government. We want to see the next government develop a really ambitious agenda focused on productivity and the competitiveness of the Australian economy. So we need to take some important steps. Obviously, the budget next week has got to set the right tone. We've got to see that government expenditure is getting back into a range which is under control. We can't continue to grow government expenditure as a share of GDP. We've got to open up the possibility for reform of things like tax further down the track. We've got to put a focus really on the compliance burden that business is facing at the moment, or over the past couple of years. Red tape's been growing like Topsy. It's strangling small business. I think it's having a chilling effect on major projects, environmental regulation as part of that. So those are the priorities. We've really got to see, I think, some clear messages next week in the budget, and equally the onus is on the major parties as we come towards the election. There has to be some thought as to what that important agenda is going to be. We can't continue to coast along. We can't be transactional. We've got to be forward-looking. We've got to get on the front foot, and we've got to ensure that the Australian economy is competitive in the years ahead.
And you're anticipating further tariffs on pharmaceuticals from the US. That does eventuate. Do you still think the government is taking the right approach by not having on this?
Well, it remains to be seen what further measures the US administration will announce. There's a lot of speculation around those items as you've measured. We'll have to wait till early April to see what they're doing. Of course, the government is making very extensive representations. They're engaging and negotiating. Business is fully behind those actions. We're supporting what the government is doing. They're putting the best case forward. It's premature to say what that impact would be, but certainly we can say there would be absolutely no point in the Australian government seeking to impose retaliatory tariffs on US product. That would be shooting ourselves in the foot. All that would mean is that's a tax on Australian consumers, and I don't think that would benefit anyone. So I think we've got to stick to the main game. Obviously, we want the US to do the minimum in terms of disruption. We've got to expect there are going to be some further measures, but we certainly wouldn't be encouraging the Australian government to take a short-sighted approach to this. Let's play the long game. Let's continue to press for good policy in the United States and elsewhere around the world.
You've mentioned shortages in skills for manufacturing. Considering all this discussion around tariffs in the US and this push to increase manufacturing, buying products made in Australia, do you think that we can actually keep up with demand for manufacturing?
Look, absolutely. I mean, one of the surprising things, and in a good way, is the strength of the labour market. So we've continued to see a very resilient labour market in Australia. We remain at or very close to full employment. We haven't seen a wages breakout, which is also, I think, a positive thing. We did see wages growth go up. It seems to have peaked. It seems to be holding at what is hopefully a sustainable level. Of course, the thing that is important in all of that is we've got to see productivity coming into the equation as well. Productivity has been alarmingly weak over the past year, and there's got to be a focus on how we ensure that that we are getting productivity across our productive sectors. So that's got to be a key focus of policy and of business. That's why business investment is so important, and we do want to see a stronger story in terms of business investment going forward. Sian, anything to add on that?
So I mean, exactly that. I mean, we did see in the survey that investment intentions have pared back a bit, which could be some sort of element of just a little bit of caution over this uncertainty. But they're still pointing to businesses, particularly for plant and equipment, wanting to continue to invest. So that's something which is positive for the manufacturing capacity and productivity.
Very good. Okay. All right. Thank you very much. Thanks, everybody, and we'll see you tomorrow at the Press Club for the big debate on industrial relations with Michelle O'Neill. If you're able to come, that'd be great. Perfect. See you there.
Thank you.
Cheers. Thank you.